We're halfway through January. Have you quit your New Year's resolutions? I haven't. One or two have been a little rocky, but we're still doing them. Just didn't hit every day. So we're getting there. But if you're still doing them, you're beating the masses. Apparently, the masses quit 2 weeks, and we are day 15. So it's been 2 weeks. But here we go. For a resolution we're going to keep, which is doing great updates like this one for you, specifically for you. That's right. Let's go through this. All right. So for rates. They're low sixes. And again, I'm happy with that. Don't get me wrong, super pumped. But the reality is, last week, and you kind of saw for a moment in time, they're below the sixes for a moment. They've popped up just a touch. Remember, green is good, guys. So we've kind of been about sideways for the last, we'll call it 3 or 4 days, give or take. We'll take it. But now let's talk about real estate in general. So half, this is impressive to me. Not necessarily good or bad, just is. Half of the US metro areas, 26 out of 50, so more than half technically, are now below last year's level in terms of prices. So the median US home prices slips under 400 grand. Well, that's good. That's affordability. I mean, it stinks if you're the homeowner, obviously, but the reality is that's not a massive decline. It is a slip. Austin, they lead the decline. So the biggest one, they lead it. Austin with 7% year over year decline. Again, not ideal, but they were also the ones that went up a lot faster than the rest of us. So, not to say like, let's stick it to those Austinites, but the reality is, look, you go up fast, you come down a little faster. It is what it is. But overall, big picture, again, for the most part, good, right? There's only 7 sellers markets left. So, somewhere 7, you can see those little buttons. The bigger they are, it looks like mostly West Coast, a little East Coast. Sellers market. And the median list price now is around 412, give or take. The percentage of homes with price cuts, 17.7%. So that's about, let's just call it 1 in 8, give or take. No, that's not true. That's not true. Let's call it 1 in, I don't know, 6, give or take, 1 in 5, 1 in 6, somewhere in that range. All right. So the 17 states that are now back above pre-pandemic in terms of inventory, you can see the colorful little chart there. Again, the Northeast, things are still really tight and not moving up there. Texas, 34%. We actually have more now than we did pre-pandemic levels. And again, you can say that's bad, and it is. It can be certain pockets. That's good though, because again, affordability, it just kind of makes things where they're opening up a little bit, and we are certainly seeing it. You can see that national listings are up 12% year over year. So again, God bless Texas, but look at Alaska, man, holding strong at minus 46. All right, more stats, same thing, shown differently. You guys can see on the left side, compared to pre-pandemic levels, the blue stuff on top are the states that have listings above pre-pandemic level. And you can see Texas, it's literally in the middle with probably the bigger bubble towards the top. So it's the middle big bubble. We got a lot. Arizona apparently beating us, but again, we just have more because we're bigger. So our bubble's a little bigger, but you can see where you stand based on the states. Again, same as kind of the map before, but it's not bad. And then on the right side, same thing. You kind of see how they, show the little graph. So there you go. You got graphs, you got charts, you got little bubbles. Hopefully you're educated now, right? All right. So Dallas Fort Worth in Texas, we lead the home in $1 million home sales. I mean, let's be honest. The real competition has always been Austin, and every once in a while, maybe Houston when the oil market's booming. But the reality is, Austin's usually the number one. And of course, we're going to beat it if they're down 7%. We now have more $1 million homes for sale. What I thought was interesting in this is luxury sales jumped 12% year over year. So you can look at all the other numbers. They don't, I got to be honest, they don't mean much to me. They probably don't mean much to you. I mean, I get them, I see them, I understand them, but it's not something that I'm just wowed by. But I did think it was interesting that we jumped 12% in those sales. So in that $1 million homes in Texas, Dallas Fort Worth area, most specifically for the last 12 months, a couple other interesting stats. You guys can see them, push pause, read them, whatever you want, save them, send this out as your own. But according to Texas Realtors, we have a 6.5 month supply. And I thought this was interesting. The median closing price was 1.4 million. That's up 4%. So of all the homes over $1 million, the median one is 1.4 mil. And the bottom left stat, basically 20%, 1 in 5. 1 in 5 of all residences were $1 million homes that were sold in Texas. That's crazy to me. Or in Dallas Fort Worth, rather. Job growth, just showing you, look at the far right of this chart. Jobs are not growing, team. They've been getting lower and lower and lower. Why does it matter? That's typically good for mortgage interest rates because job growth can lead to inflation. So when there's no job growth, hopefully inflation stays calm, and then our rates can hopefully continue to come down little by little, inch by inch. 70%, 2025, the monthly average is down 70% from last year. That is crazy to me. And then lastly, we've been doing this as it's come along, for the last, call it 2 months. And all of a sudden, Mr. Pulte here, moonwalking back saying, oh, I got other things to worry about besides the 50-year mortgage. So whether it was actually initially truly something they meant and believed, and again, I have my opinion. I don't know that it would have been a great thing. I think there's certain circumstances where it could have worked. The reality is, we probably won't be talking about it anymore. He says there's other things that they have other priorities and they're gonna kind of move towards that. So I think this is the way they're just acknowledging it's not going to happen. Product of the week, no surprise, refinances. Refinances, we've been very, very busy. If you know you or somebody somebody you love needs a mortgage refi, even if you're not sure, let's run the numbers to be sure. We'll help you understand and make sure that we justify the cost, any cost that may be associated with it. And sometimes there's no money out of pocket, sometimes there's no fees. So if you know somebody, reach out to your favorite mortgage lender, hopefully the Mortgage Mark team, and let's have some fun. So along kind of sticking with the theme, right? As far as like the inventory and prices and things like that. But the median payments fell to about $2,400. That's the lowest in 24 months, so 2 years, give or take. That's not totally shocking because again, the more refinances that get done, people with the high to mid six, the sevens, the eights, they're refinancing now in that low six, fives, depending on how they want to structure it. So that's not huge, but point is, it's always good to promote the good news. Which means with that lower cost and the lower rates, so rates when we see things down like in the fives, it does make it to where their purchasing power is up about $30,000 in the last 6 months. So again, in the last 6 months, with the rates change, home buyers now have $30,000 more purchasing power, meaning the same payment can buy them $30,000 more home. This is a phenomenal time to do it. If rates come down, there's a lot of pent up demand. I can see it to where prices stabilize and even go up, just supply and demand. So this is a great time to be looking to buy. I got to be honest, I didn't love this one. I kind of scratched my head. I still don't quite get it, but I got outvoted. This is the meme of the week. Loan officers about now. 2078 is going to be my year. I can feel it. So I don't know. I mean, I get it because it's been 2.5 years of just a sludge and a grind. But I really do think 2026 is going to be phenomenal for the housing market. And I think the first part, like right now, Q1 is the time. If you know somebody who's looking, share some of this information with them, let them know because it is a great time. Evidence of success or awesomeness, man. God bless our YouTube channel, our marketing folks. We are getting a lot of traction on that. And appreciate anybody, here they gave us a shout out and we love that for seller financing. Happy to help them. And really and truly, we didn't really help them because it's seller financing. They don't need a mortgage. But I remember talking to this guy and he was a good dude and I appreciate him taking the time to do that. And lastly, you know how to find us. Come on now, share, subscribe, forward, all that fun stuff and enjoy the day, the week, the weather. It's really nice here in Texas for being January. It's been a warm, I mean, really warm winter. And I'm not complaining at this moment. Talk to me in August and we'll see. But as always, appreciate you watching. And when you think mortgage, think Mark.